A major change is happening in the crypto market, and if you don't understand it, you're going to get absolutely rinsed in the coming months. In today's video, I'm going to break down what that shift is using data and how you can incorporate it into your crypto portfolio strategy. Now let's get into it. What exactly is this big change that I'm talking about? What I'm talking about is the decrease in altcoin demand. And I know the title of this video is a little bit dramatic to get your attention, but I think it's really important that you understand this. And what I mean by a decrease in altcoin demand is that up until and including this point in the history of crypto, this industry's decade and a half history, there has been a substantial amount of demand for buying altcoins that was completely independent of any fundamentals related to those altcoins. It wasn't dependent on the revenue they were making. It wasn't dependent on the number of users they had. It wasn't dependent on network activity. It was independent of all those things. It was solely dependent on how well they were able to hype themselves up. And there's a lot of reasons why this is. In some cases, it's because it's often difficult for people to get access, people being the average person, to get access to early stage tech investments now. They're not an accredited investor, and even if they are, they don't have the connections. So they turn to one of the only places where they can get exposure to those sorts of VC level returns, and that is crypto. Another reason is because it's highly unregulated. Another reason is it's a new technology you could go on, right? But the fact of the matter is that a ton of crypto demand, a ton of demand for buying altcoins was completely exogenous to any fundamentals. It was just people wanted to buy altcoins. And then as a result, a ton of crypto business models are also dependent on this demand, even if they have fundamentals like revenue, like trading volume. That volume, that revenue comes from people wanting to trade altcoins. And so I'm going to break down exactly what I mean by this. And now, if we look at the performance of the crypto markets recently, okay, so this is just total crypto market cap. All right, let's look at Bitcoin to start, right? Bitcoin doing fairly well, all things considered, still up substantially from where it was for most of 2024, right? You can go back to November. Bitcoin was under 70,000. It's still over 80,000, even after dropping. Let's look at altcoins excluding the top 10, right? This is others. So this is everything excluding the top 10, or I forget exactly where it cuts off, something like the top couple hundred cryptos, which is going to be the vast majority of market cap. This not up so much from last year. In fact, it's right in line with where it was in October, right in line with where it was it's below where it was in July, below where it was, in fact, last spring. So Bitcoin far above, altcoins way below, right? Zoom out further. Zoom out to 2021. Never even broke its all-time high, this bull market. And I already know what people are going to say. Altcoins haven't broken their all-time high because the bull run hasn't even started yet. Guys, let's just look at the numbers real quick, okay? Total crypto market cap ran from around $730 billion at the bottom to $3.7 trillion at the peak. Added nearly $3 trillion. Went up around a 5x. Bull run started. You could argue that we're in a lull in the middle versus being in a bear market, but the bull run started, right? The bull run started, and a lot of people have made incredible returns, including many people who follow this channel. And so you can't even get angry when people say something like that, like the bull run hasn't started, because it's so demonstrably false. If you look at the information, you look at volumes, you look at price performance, they're just repeating what they heard from an influencer, and probably an influencer who's selling a product that they know you're only going to buy if you believe that the bull run hasn't started. So you can't get angry. However, if you say the bull run hasn't started, it does make me question your views on other things. But anyways, point is, people don't want to buy altcoins right now, not in the way that they used to. And honestly, can you blame them? Look at some of the altcoins that have come out of this industry recently, right? You have valueless meme coin after valueless meme coin, and you can certainly make great returns on a lot of those. But most people end up losing money, right? And there's a reason why in the public consciousness, crypto has increasingly become conflated with gambling over the years. And then you look at the price performance relative to Bitcoin. So let's look at Ethereum, right? We're not even looking at something that's useless. We're looking at something that's one of the, probably the most used networks. ETH BTC. Look at that. It has bumps here and there, but basically it's been down only since 2021, right? It's back to its level from pre-COVID. Back to its level from pre-COVID, before DeFi, before NFTs, when the stablecoin supply was a fraction of what it is now. And despite all that, it's been underperforming Bitcoin. So then can you blame people for maybe thinking, I won't waste my time in altcoins, I'll just buy Bitcoin? And the numbers largely reflect this drop in demand. So you have DEX volume is actually holding up better than you might think, and that's because this gets to another key change in crypto, which is people using DeFi more. But DEX volume down significantly from its peak a few months ago. Centralized exchange volume has fallen off more. According to this analysis, total trading volume of altcoins has returned to pre-FTX bankruptcy levels, with the top 10 altcoins accounting for 64% of total volume. So the bottom has fallen out of small altcoin trading volume. The fact of the matter is people just don't want to trade them. And I think this relative strength among DEXs is because more of the volume is now happening on decentralized exchanges, or a relatively larger portion is happening on decentralized exchanges compared to centralized exchanges. You can see the dominance is around 27%. In the past, that was often more like 5-10% if it was even that high. And you look at things like Google search trends, right? These are searches for altcoins. Never reached its peak from 2021, either the spring or the fall. And then now languishing here around where it was in the last bear market. So people just simply are not as interested in altcoins as they used to. And I'm not just here to be a doomer, right? I'm going to tell you in a second what you can do with this, because don't worry, Patrick's not going full Bitcoin maxi, although I don't blame people who are at this point. But I'm not going full Bitcoin maxi. But I think that the strategies that worked in the past, they're not going to work as well in the future. And this is coming from someone who's spent thousands and thousands of hours looking at data related to altcoins, who has to every single day. But the fact of the matter is the strategies that worked 2-3 years ago, they're not going to work anymore, because it's not just enough to get hype now. You actually have to have fundamentals to back things up. And so what fundamentals are there in crypto that could actually matter? Well, let's take a look. First is you have the fact that Bitcoin at the moment is one geopolitical disaster away from giving the dollar a run for its money as the reserve currency of the world. This is from Van Eck, a major TradFi institution. They wrote, "That interest is no longer theoretical," referring to Bitcoin. "China and Russia have reportedly begun settling some energy transactions in Bitcoin and other digital assets. Bolivia has announced plans to import electricity using crypto, and French energy utility EDF is exploring whether it can mine Bitcoin with surplus electricity currently exported to Germany. These are early signs that Bitcoin is evolving from a speculative asset into a functionary monetary tool, particularly in economies looking to bypass the dollar and reduce exposure to US-led financial systems." So there you have it. A lot of countries are starting to look to get out of the US-led financial system, and in many cases they're turning to crypto to do so. And I think you can draw a natural line of why that should happen from the fact that this would be the first change in reserve currency that we've had since the advent of the internet. And so it naturally makes sense that the thing that replaces the old currency would be more internet native than the dollar. If and when this were to actually occur. I think there's also a lot of signs that the dollar is still strong for the time being. So that's one thing you have, and that's not just Bitcoin, right? There's more that you can invest in or follow besides just the growth of Bitcoin there, because there's other networks that are focused on remittances, on cross-border transactions, on finance related to those transactions. I mean, look at the top performers over the past 30 days. In the top 100, you have Fartcoin, a meme coin, and then you have Curve. And what is Curve? It's one of the largest exchanges for stablecoins. It's the largest exchange that's dedicated to swapping stablecoins. And what's another term for stablecoin swaps? Well, one way to think of them is as foreign exchange. So as people look for ways to exchange different currencies outside the traditional financial system, many of them are going to turn to crypto-based solutions, and Curve is currently the premier one. Aside from cross-border finance and payments, you can also look at which applications are actually generating fees and revenue. Here on DeFi Llama, if I look at the top revenue generating applications over the past 30 days, we see the top 3 relate to stablecoins: Tether, Circle, Tron. Tether and Circle, of course, are the 2 largest stablecoins, USDT, USDC. Tron is a layer 1, but it's primarily used for peer-to-peer payments on Tether. And these things are bringing real money. But then we go down the list and we see there are also other applications that are bringing real money. We have Hyperliquid, $38 million in the past 30 days. Jupiter, $19.37 million. PancakeSwap, $18.42 million. Sky, aka MakerDAO, $14 million. And I could keep going, right? So there are applications that are generating real money. The problem is, what are the problems here? The first problem is that's not most applications, right? So we see like, okay, how many brought in over $1 million in the past 30 days? 48. Cool. Not all these have tokens. And then we look at the top 100. So there's top 100 in the top 100. There's 48 tokens that brought in $1 million, or projects that brought in $1 million in the past 30 days. Not all of them have tokens. Not all of them are in the top 100. So there's a ton of projects out there that actually have very high valuations, but are not really bringing in any money. Second problem is that a lot of this money that's coming in, it relies on people wanting to speculate on altcoins. And some of them can seamlessly transition to a world where people are using crypto for exchanging other assets, but most of their volume today is related to altcoins. And that may be fine if you want to invest in a business whose business model relies on people using crypto to try to make more money, but you should at least know what you're investing in, right? And then the third thing that you could do, if you believe that this industry is going to keep growing and be used more, is you could try to find some way to insert yourself into a revenue stream in the industry by either building something yourself, by joining a project part-time. One thing that's great about crypto is that a lot of projects are willing to hire people remote part-time for even just a few hours a week. So unlike most industries, it's possible to actually work and earn a living in crypto without going all in, right? It's something that you could do on the side. And so that's another route you could take. And with AI, vibe coding now, never been easier to build something. I've been, just for fun, building websites, Discord bots recently, and I know some coding, but I'm not a software engineer by trade, right? I'm more of a finance guy. And so with a borderless industry like crypto, location's not an issue. Identity is not an issue because in many cases you can be anonymous. And with ChatGPT, really skill isn't an issue either, because you can go ahead and start learning and building things tomorrow if you really wanted to. So the only thing stopping you is yourself. If you want to learn more about where the crypto industry is going, as well as which opportunities still exist, check out my newsletter, newsletter.dynamodefi.com. It goes out every week with the most important things for you to know in the crypto market. And for more videos like this, be sure to like and subscribe. Until next time, this is Dynamo DeFi.